In this video, we are going to be going through an example of the cash receipts budget. So what I have below here is a template. For those of you joining from my Udemy course, you should be able to download this template. You'll see the link to it, and you can use this to walk through it as we go through it. Now, this problem is very similar to one that you might see in any normal textbook. It gives you some of the data. There are a few different ways this type of problem can be tested, but again, this is a pretty common approach. So with this problem, we have a company named Monocar Enterprises. They have assembled the following data in preparation for the upcoming budget meeting, and now we're trying to complete the cash receipts budget. So first of all, anytime we're dealing with the cash receipts budget, one of the most important things is understanding what our sales are. So I'm actually going to add a line right here. Even though it's not technically part of the cash receipts budget, we need to know what the sales are, because that's going to impact our cash receipts. So what we say here is that our sales in January are expected to be $55,000. So I'm going to put that down here. And they're expected to increase at a rate of 5% per month throughout the rest of the quarter. So what that means is we can just add 5% or multiply by 1.05 to find out what the sales are for the remainder of this quarter, each of the 3 months. So now we have the sales figures that we're going to need, but we need to know a little bit more about how we collect these. If this was a cash company, we would just be collecting them all that month and we'd be good to go. We wouldn't need any information on accounts receivable, beginning or ending balances. Everything would be collected right away. However, it's not in this case. We collect items, in this case, based on 70% of a month's sales collected that month, 25% collected in the next month, and the remaining 5% are expected to be uncollectible. So many companies that offer credit sales end up with bad debts expense as well. So we need to know that collection history. Now, notice with the 5%, the only reason they need to give that to us is to know that it's not going to make it to the cash receipts budget anywhere. It's just not going to be there. We're going to have to account for the 70% for a current month, the 25% the next month, but we don't even need to worry about the 5%. We're not going to have a line for 5%. It just doesn't need to go anywhere. Also, December of last year's ending accounts receivable balance was $13,500. Now, what we need to know that for is because we're collecting it in January. If it was from December sales, this is the 25% of December that's going to be collected in January. Now, I have in this particular template 2 lines that I've highlighted in yellow, and these are informational only. So I'm going to plug some information here, but it's not going to be part of our formula overall. It's just purely informational. So January's beginning AR balance, accounts receivable, was $13,500 because that came over from December's ending balance. Obviously, we don't have December in this template. So $13,500, we're good to go there. Now let's go through the actual cash receipts budget. So in January, we're going to collect 20% of December's sales, and I'm just going to say that is the beginning AR. So that's where our $13,500 actually comes into play for the calculation. Again, the yellow cells are just informational only, but we need to plug $13,500 in because we're going to collect that in January. The other part we're collecting in January is 70% of January's sales. So 70% of the $55,000 in January gives us $38,500. We're obviously not collecting anything of February sales in January, so there's nothing more we need to do. Because of this collection pattern, sales are collected in either 1 month or the second month. So because of that, we're only going to ever see 2 lines for a particular month. Now, the ending AR balance, which, by the way, anything ending for one period becomes beginning for the next period. So again, this is just informational only because we're going to need it for the balance sheet. But the ending AR balance, remember, that's the 25% of January's sales that we're collecting next month. So that's $13,750 that is not going to be part of this calculation. It's going to be collected next month. So as far as the cash receipts from customers, it's going to be the $13,500 plus the $38,500 of January sales. So this month we're collecting $52,000. Now, since we're using these yellow cells as information, let's carry the $13,750 up here just so we know that it's there. And now we're going to add a line here. We're going to call this 20% of January's sales. And I'm going to take out that information. That's going to be that $13,750. We're also going to collect 70% of the current month, which is February's sales. That's going to be 70% of the $57,750. Whoops. My formula must have been wrong there. 70% of the February sales of $57,750. Now again, ending AR for February is going to be the other 25% of February sales. So that gives us $14,438 that we're collecting next month. Now again, for total receipts for February, we're collecting these two amounts. $13,750, $40,425. That gives us $54,175. Going forward to March, we're going to bring over this $14,438, and again, that's going to be the first thing we actually collect in March, which is 20% of February's sales. Again, we're collecting 70% of the current month, March's sales. So that's 70% of this $60,637.50, which, by the way, it's just rounding. I have it set to round to the nearest dollar, so not a big deal there. So that's $42,446, and we're collecting those two amounts, which is $56,884. The other 25% of March's sales, the $15,159, is the ending accounts receivable balance that we're not going to collect until April, which is outside of this problem. So that's what we have for this month. Now, we have the quarterly amounts there. So those are important for a few things. Now, when we're talking about the quarter, we're looking at this entire 3-month period. So if we wanted to see a beginning AR balance, it's not the sum of these three. Instead, it's the beginning of the quarter, which is also the beginning of January. So the beginning quarterly balance of AR would be $13,500. The ending quarterly balance would be the end of the quarter, which is the end of March. So that's going to be $15,159, which carries over to the next month, the next quarter. Now you're going to sum up the total cash receipts. So that's $163,059. There's really no need to sum up these individual lines because that was pretty much just information to determine how are we going to complete this in the first place. So at this point, this is what we have for the cash receipts budget. That's really all we need to worry about. $163,059 is our total cash receipts, and this should complete this problem. So the only thing I'll mention is that, again, there are different variants of this particular problem. For example, not all of them have a bad debt amount. Some of them say you're going to collect everything. Some of them also go out to an extra month. So instead of just saying a certain percentage collected this month, a certain percentage collected next month, sometimes they'll say another percentage is collected 2 months from now. So then for every month you'd have to have 3 separate lines instead of just 2. The other thing I've seen in some cases is they tell you that out of your sales, let's say 20% are cash sales, period. So that's obviously collected that month. But then out of the 80% credit sales, they might say out of that, let's say 50% is collected this month, 50% is collected the next month. So 50% of the 80%, which ends up being 40%. So they'll give it to you in that particular methodology as well. Now keep in mind that just means you might have, in that case, 3 lines, because you have the cash sales, the percentage of the credit sales collected this month, the percentage of the credit sales collected next month, and you'll need to add them up accordingly. So hopefully this has helped to clarify the cash receipts budget example. Hopefully this helps you, and we'll talk to you in the next lecture. Thank you.